David Burrows is here from Barometer. We're talking North American large cap stocks and Ernie's in Victoria. Hi, Ernie.
Oh, good morning, gentlemen.
Good day to you.
My question is on Vodafone, and I would like especially some information on the big takeover rumor by AT&T and Verizon. Has it died down?
Does it make sense to you?
Well, you know what? It's not an impossible thing. Look, at the end of the day, you're going to continue to see consolidation in these industries. I'm not going to comment on takeover. What I would say is we like wireless as a key theme. You know, in Canada, of the telecom companies, we own TELUS because they've been so strong in the wireless space.
I won't hold that against you.
and so certainly, if I were looking at, is Vodafone something that I could own? It pays us a 5% yield. It's well covered. The dividend's $1.50. They earned $2.45 this year. There's growth in wireless still across the globe.
The setting aside speculation of a pickup by AT&T and Verizon that would then split up the assets between them of Vodafone. It's long been expected that Vodafone would spin off its stake on Verizon, get itself a big cash reward, and then deploy that somehow. Is that something that factors into your Vodafone decision?
Look, you know, any of these catalysts are always positive. You know, we watch for things that we could own today that make sense today, but if there was a catalyst, you know, you can unearth some value. And you're always looking at that. Actually, we'll talk about one of those today as one of our picks. But we don't like to make an investment solely based on that. Look, if Vodafone spun off assets and wound up with a big cash hoard, it gives them lots of flexibility. They got to turn around and invest that. They just have very solid assets. So it's not exciting. It's not something where I see a significant secular trend in right now, but I think that you're going to do okay. You're going to get paid well, and you get some dividend growth. You
mentioned you like TELUS here in Canada. Let's bring Dorothy from Hamilton in on this conversation. Hi, Dorothy.
Oh, hi, David and Michael. First of all, I just wanted to compliment you on what a great show this is. Always very informative. I'm interested in owning a telecommunications stock. My husband presently owns BCE, so I was looking at buying something different. And I was wondering what David would recommend. I was thinking of either Shaw or TELUS.
Sure. Excuse me. I'll tell you what I like about TELUS as opposed to Shaw. TELUS has the IPTV, which they're doing a great job with, and they're getting great growth out of. They've got a great franchise in mobile, in wireless. But what's most important about TELUS is they are probably the most important poster child for understanding investor appetite today. They said 3 years ago, we will raise our dividend twice a year for the next 3 years. And the stock went on a tear, and they've had a 5-year compound annual growth rate of just over 22% in the shares. About a month ago, they said, now it's been 3 years. Our payout is still lower than other wireless service providers. We'll not only commit to making a dividend increase each of the next 3 years, but we'll give you more clarity. You could expect a dividend increase of 10% or greater. So in a world where investors are paying a high multiple for predictability, this is exactly what they're looking for. And you can see it in the price performance of the shares. Shaw, great company, right? But they don't have the same wireless business, obviously. And I think what they don't get is the power of a clear, well-defined dividend policy, and you want all of those cylinders firing.
But my boss at BCE tells me that content is king, and TELUS doesn't own content, whereas both Rogers Communications and BCE, the parent of Business News Network, do. That's not a concern to you?
It's not because investors know exactly what they're buying with TELUS. They have a very clear, well-defined message as to where the strategy in the business is going, what they're doing with CapEx, what they're doing with dividend payout. In fact, they talked about raising the dividend payout ratio, or the ratio of payout versus their earnings. And that is the type of thing right now that's motivating investors, clarity.
All right, time now for the Market Call Minute. First one, this is from Gino in North York, looking for your opinion on Ainsworth Lumber. Is Ainsworth Lumber a buy, a sell, or a hold?
Pent-up demand in housing is creating strong demand for lumber. pine beetles caused a problem for supply. You've got supply demand in sync, and the lumber producers are benefiting. I would buy Ainsworth.
Do you own it?
We own some currently. We own other lumber producers as well.
For Surge in Richmond, BC, Air Canada, are the Class Bs a buy?
Class B is a speculative buy. We own it. We've made a lot of money in it. Pension liability is a risk. But their seat miles are very strong and their capacity utilization is very strong currently.
All right, Visa for Henry in Kelowna, BC, buy, sell, or hold?
One of the fastest growing financial services companies you can invest in without balance sheet problems that you see in some other banks. So this is a growth stock in the financials group. We own the stock.
All right, for Roger in Sudbury, Ontario, Shoppers Drug Mart, do you buy that?
I'm going to talk about another drug retailer today. I think that Shoppers is facing headwinds in their reimbursements, and so we would prefer to own a U.S. drug retailer today than a Canadian drug retailer.
Okay, stay tuned on that one, Roger. Dave in Oshawa for RioCan REIT. Is it a buy, a sell, or a hold?
REITs continue to be a very important theme in the market. We have reduced our exposure to the consumer REITs in Canada, the retail REITs, and we are more focused in the U.S. industrial REITs where there's a little bit more pricing power. Having said that, I could happily own the stock.
All right. Thank you for your telephone calls, your email messages, and the tweets, too. We're taking a quick break. When we come back, it's the top picks from David Burrows of Barometer Capital Management.